Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for April 26th, 2024. Well, how about that? We had Microsoft and Google run to the rescue of the market, producing good earnings reports, and will it save the market here? Certainly possible the way the market is acting. We even had things that weren't related in the tech sector, such as Amazon moving up on the Apple and Google earnings reports. So a big push in the tech sector trying to push things back up. But obviously we had some other data that just wasn't bullish, and we've got some more data today that could make this a real interesting day. So how about we take a look at what happened overnight? Well, first off, Asian markets had a pretty good night overnight. Hong Kong surged a bunch because it is very tech heavy, up 2.12%. Modest gains pretty much everywhere else, and then we had Australian markets just a little bit lower. If we take a look at Europe this morning, Europe is bullish across the board, looking good. And here again, two companies are saving the world at the moment. I'm not sure we really want that circumstance in our markets to have so much dominance by two companies, but that's what we've got going here at the moment. If we take a look at our U.S. futures, we've got green across the board with, of course, the NASDAQ sharply higher, up 178 points here at the moment, looking for a big gap up in the tech sector. Let's take a look at our oil this morning. Oil's a little bit higher here this morning. We have oil up 34 cents at 83.91 a barrel. Brent is up 36 cents at 89.36 a barrel. And then we have a natural gas is down again almost 6 cents here this morning. If we take a look at our precious metals, we have precious metals looking bullish here this morning. Gold's up 15, almost $16 an ounce. Silver is up. Copper is up, platinum is up, and only palladium is just ever so slightly lower here this morning. If we take a look at the crypto market, we've got Bitcoin at the moment down $273 a coin, with a mix of activity here in the cryptos. So you'll want to keep an eye on that today. So how about the bonds? Well, here's one of our problems here this morning. Once again, 2-year bond is at 5% this morning. Our 10-year bond is at 4.69%, and our 30-year bond is at 4.79%. So as the market is trying to zoom back up, the bond market is continuing to disagree with the inflation situation from those numbers that we saw yesterday, showing that those core numbers grew by 3.7%, which was a substantial increase. So we'll want to be keeping a close eye on that today, and particularly with some of the data that we have coming this morning. So what does all that mean for the day? Well, how about we settle in? Let's buckle up. Let's get ready for the Friday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I very much appreciate it. Let's take a look at these charts and see if we can figure out how we might want to approach the market for today. And remember, let's shake off our bias and look at the chart for what it is, not for what you want it to be. So when we take a look at the diamonds, we had a really good hold here on the diamonds yesterday. We pushed back down. We threatened to break this support for a tiny little bit and then reversed. Nice little hammer pattern in here. You'll notice we still have a gap above that needs to be filled. So if we can follow through here this morning, if the bulls have that energy to follow through, then I would look for a press up into this area here. We'll see if we can close that gap here in the diamonds. See if we can press up into that little bit of a resistance, and notice that there's more than just a couple candles in there. That runs back across here a ways. There's a little bit more price congestion in there, and if we can push on through there, then maybe we're back up here testing that recent high here in the diamonds. Now, you'll want to note that there's a lot of price congestion here, and it gets even a little bit more intense right up in here because we're going to run into our moving averages up here on that resistance area of the chart. So if we can continue to push beyond that point, well, we've got maybe a little bit more struggle to push on through up there. Now, what I'm going to do is I'm going to take this line that I have right here and I'm going to change this, because right here is now our lower high in the chart. We're going to need to break back through that area of the chart of resistance as well. If we look at this on the bearish side, if the bears were to find inspiration today, you can see with this gap up this morning, well, first thing we'd want to do is break back down below that little area of price support in the chart. And that stretches, shouldn't say little because it does stretch over here quite a ways. If we do break down through there, then I would look for a retest of the lows here in the diamonds. Now, breaking down below there, it gets a little bit painful. As you can see, we might catch these little lows right in here and hold on, right, like we have in this little consolidation. But if we push beyond that, I would suggest we're coming down into here. Let's take a look at our SPY. Now, SPY, big pop here with all of these tech giants in the SPY and some of them in the Dow. We have this big pop coming in here today, big old bullish engulfing candle at the end of the day there on the SPY. So if we can continue to follow through with that, well, you can see that resistance right up here. We're going to have a price resistance area to be dealing with. We're going to have a downtrend area to be dealing with. So somewhere right up in here, we're going to have to make that decision. Can we push on through? Should we push on through there, then you can see this resistance level up here that we will be having to deal with. Now, getting up through there will once again require us to break through all of these moving averages. We're going to have to bust that 50-day moving average on the way up there. So keep an eye on that. Breaking through all the way back up here and holding a higher low above that downtrend, then we really start to reestablish an upside trend in the SPY. If the bears were to find inspiration today and push us back down, well, you can see it here. First step down, test the support here in the chart. If that were to fail, then I would look for about 50% of that candle to be tested, somewhere in the middle of that, to kind of catch a test of support, and then beyond that we're coming back down here to test these recent lows. Notice that this right here yesterday created a little higher low in the SPY. So we have to consider the possibility, although we've got a lower low here and a higher low, we may be wedging here in this pattern, or it could be the beginning of an upside trend picking back up. So we'll want to watch that pretty carefully here on the SPY. If we take a look at our QQQ, well, our NASDAQ, another big bullish engulfing candle based on two companies. And we rallied up strongly, pushing into a level of resistance right in here. So first step is see if we can break through this area, these highs of these two candles, push on through to the upside. And if we can, you can see we're going to run into a very big congestion area of price action in the QQQ. With the strength of the market, or with the strength of the tech, there's no reason that we can't push on up here beyond that level and push right up here into this next area of congestion. And unfortunately, if we do that, we're going to be running into these major moving averages up in here and that price resistance that they will add to the chart. Now, I could certainly and probably should grab a line from here and draw it down here as that possibility that this could still be a lower high in the market, at least at this point. If the bears were to come back into today, and remember, we've got some economic data that could make that occur. If that were the case and we were to push back down in here, well, you can see probably somewhere right in there would be support, and then we're going to start testing some of these lows for those bears if they were to push on down in these charts. Let's take a look at our IWM. The old Russell here ran up into its downtrend, struggled here just a little bit. Remember, IWM doesn't get the benefit of big tech. As a matter of fact, what we're likely to see is the IWM will get the bad side of big tech, and that is we will pull money out of some of these small cap stocks in favor of the tech giants. So we could see some weakness here in IWM. So let's keep an eye on that today. If the bulls can continue to push on through, well, we need to break that downtrend. We need to break on through there. We need to break through that little high right there and continue to push up to this next level of resistance in the chart. Of course, breaking through there would be very, very important to that move to the upside, and if we were to do that, we're going to come into contact with those major moving averages and some additional levels of resistance. So we'll have to keep an eye on that area. If the bears were to find inspiration here today, not too hard of a thing to see, probably pushing back down to retest some of these lows here in the chart. Breaking down through there, you can see we could start to drop into these levels here and then on down in the Russell. And I think that there would be a really high probability if we do start moving back in the Russell that we would come into contact with our 200-day here relatively easily. So watch carefully there. That 200-day, you get close to it and it often becomes a magnet and really starts to pull to the downside. If we take a look at our VIX, well, our VIX pulled back yesterday, particularly after we were kind of floating around in here, particularly after two companies reported and taking the fear out of the market. So what do we have here? Well, we have a break of this downtrend, and what we might actually be seeing develop here, look at this right here, we could develop a head and shoulders top on our VIX. So let's keep an eye on that. Now, if the bulls continue to find that inspiration here today, and so far in the futures we're seeing that they will, I would expect this fear to continue to drop in the market, despite the fact that we have all of these geopolitical risks and inflation risks. We are very, very excited about earnings right now and trying hard to ignore everything else that's happening in the market. So a retest in this support here would look like the likely place to go, and if that were to fail, then maybe pushing on down into here in that chart is where we would be looking at. So if the bears, however, were to find some inspiration, probably in the economic data, if they're going to find any, and pop back up, well, you know, you can see those levels up here. We would pop back above this area here, maybe stretch out and see if we can test that area up here, and then of course we're right into that major downtrend here in the chart on the VIX. Let's take a look at our T20s here. Our T21-22 had a major change yesterday. We were pushing down toward this bearish reversal zone yesterday with the selling that was coming into the market, and then as soon as big tech reported, well, we zoomed back up here. So we're looking pretty good here right now on T21-22, but we did open up some opportunities even back to the downside on that move. So first off, if we take a look at what's happening here, if the bulls can continue to find inspiration today, well, we certainly have that upside opportunity where we could stretch up here nicely and push on through. And if the bears find inspiration, well, we know that there is some opportunity here to the downside as well. So we'll want to be keeping an eye on those data points today for that possibility that we could go either direction here in the market. If we take a look at our T2108, got to give this up. The T2108 pulled back just a little bit, so the bears were in control. More stocks were pushing down than going up. You saw that in T2122. The bears were in control, but with that big surge on those two earnings reports, we came back up quite a bit. So we're holding on in here in T2108. Notice there's a support level right in there, and if the bulls can continue to push that up today, I'd look for some of these resistance levels up in here that we may be testing in that race back to the upside. If the bears were to find inspiration, well, breaking that support would probably push us back down toward these lows. There's a little bit of support right in here that we could come back down into and test. If we take a look at our T2107, now our T2107 also had the bears in control there, pulling it back a little bit, but this is way better than what I see in T2108. We rejected this resistance yesterday, pushing back down, but with the bullishness that we're seeing this morning, I would expect that to pop right back through to the upside. So we'll be looking for some resistance levels up in here on that chart. Now, keeping in mind, as you can see, we get up into this area and we get into a little bit of a frothy area in T2107, so we'll want to be keeping an eye on that if we stretch back up here. If the bears were to find inspiration, well, once again, a little test of the support down here would not be out of the question. And then if we take a look at our T2101, well, interesting yesterday because T2101, we had about an equal energy here in the market because we started off with a real bearish wave. Everything was bearish based on those economic data points. And then, well, we forget about the economic situation, and two companies report, and whoo-hoo, let's celebrate, and we all come back up here. So it ended up being flat, kind of an equal match here between the bulls and the bears. So we'll want to watch that carefully. What we'll want to see today, with the bulls being in control this morning, we're going to want to see that breadth increasing on the bullish side, that push to the upside here, showing that those bulls are really coming back into the market and raising that breadth. If the bears find inspiration here today, if we see that breadth increasing to the upside, that's going to be a bad sign, or it would be a rather bad sign if we saw that breadth decline on this bullish wave. So watch that carefully today. Let's take a look at our economic calendar here for today. And our economic calendar, well, we've got a few things here this morning that we're going to want to be paying attention to. First off, we're going to have that core PCE number. Remember, they talk about this. This is the Fed's favorite number. And looking in here this morning, they are expecting the personal income number on month over month to increase to 0.5. They're looking for personal consumption to decline to 0.6. Core PCE number month over month, they're looking for that to stay flat. Year over year, they're looking for that to go up just slightly. The core number on a month over month, they're looking at that. This was just the PCE price index, and then the core price, they're looking for that to stay flat. And notice right here, they're actually expecting, with all of these increases, they're expecting in the consensus for the core PCE year over year to decline. This is going to be a really important number here this morning. If this happens to miss to the upside, and the numbers that we saw yesterday give us that potential lean that we could miss on the upside, watch that carefully. I would expect bond yields to shoot up if we miss these numbers to the hot side. If it happens to come in less, well, the market's going to celebrate, and we could really push to the upside because we'd likely see bond yields coming down. Now, let's take a look what else we've got. We've got consumer sentiment here this morning. Consumer sentiment last time declined, and we're going to be looking here to see, as you can see, consensus is just kind of punting right now. They're not sure what's going to happen. coming in flat, 77.9, 3.1. Looking at some of the numbers from yesterday, you might make the assumption that the consumers are a little bit stressed. So watch this one carefully. This could also be telling for the day. And then we're going to have that Baker Hughes rig count, which pretty much everybody's going to ignore, I think, for the day. And then we're going to have to focus on these morning earnings reports. Now, I'm not doing a blog today. Normally don't do a Friday blog. So I'm going to run through these really quickly this morning. We have ABBV that will be reporting this morning, AON, ALV. We've got AutoNation. Ball will be reporting. We've got Barnes Group, CNC. We've got Charter. We've got Chevron. We've got Colgate. We've got ExxonMobil. We're going to hear from FHB, GNTX, HCA, LYB, NWL, Piper, Roper, SAIA. Just a second, I got to have a little scroll here, and we've got T. Rowe Price, TNet, SLCA, and Wisdom Tree. Now, there's going to be more reports than this, but these are the notables that I've pulled out for today. So you'll want to be keeping an eye on these earnings reports for this morning. Certainly have the potential to move the market a little bit, but you can see that the reports that we have in here this morning are not the kind of reports that move us or change sentiment completely like Microsoft and Google. So let's take a look at some stocks that could be setting up for today. But before we do that, everyone, if you could do me that quick favor, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube. Also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor, and that would be click that thumbs up button, leave a brief comment. That helps the channel to continue to grow. Thank you so much, everyone who does take the time to do that. I truly appreciate it. You guys, I'm humbled every day. I really am. So thank you so much. And always feel free to share these videos. In fact, it helps a lot if you just click the link and grab that video link and share it on your social media feed. Or if you want to support the channel, help it out. Right below the title of the video, there's a link where you can, the Buy Me a Coffee link. And thank you for everyone who does support the channel by using that Buy Me a Coffee. I truly appreciate it. Let's take a look at some of these stocks that could be setting up for today. Remember, these are not recommendations to buy or sell any security. You need to continue to do your own due diligence. Be very, very careful here in the market and make sure that you're following your risk tolerances and your rules. You should never, ever follow anyone else's trade ideas blindly without making that trade yours and putting together your plan for that trade. Let's take a look here. UUP, take a look at what happened yesterday. We had a big pop here. Dollar strengthened a lot as those bond yields went up. You can see this morning we're trying to get a print down here, but what I'm seeing in the bonds right now, I'm going to guess that the dollar is going to be moving back up or be very close to those highs yesterday. So we're holding up in this upside trend on the dollar. The strength of the dollar is having major pressure, creating major pressure around the world. You hear China screaming, you hear Europe screaming about the strength of the US dollar. And so far, our federal government is not willing to listen. They're going to continue their spending practices and continue to keep pressure on that dollar and honestly keeping pressure on inflation. So we'll want to watch that carefully here. This is a very bullish potential setup that we could pop right on through to the upside. Now, that being said, this morning I mentioned that gold was up this morning. Notice gold is pulled back to find its trend, and it's holding in here on this trend line, finding a little bit of support. And this morning it's trying to push up, so let's watch that carefully. Gold could move on up and maybe fill this gap with a little bit of fear here in the market, so watch that carefully. Gold making a move, and silver has been finding a little bit of support in here as well. Now, I still think silver needs a little bit of rest. Honestly, I do, because we're away from this trend in here. But notice we're starting that push back up, and we may fill this gap here in silver. So keep an eye on that. When we look at some of the copper stocks in here, FCX finding that bullish move in here yesterday, trying to push on through, and we see copper going up this morning. Might be trying to break that little downtrend and push back up here and retest those highs. So I would be keeping an eye on some of these precious metals. I think there's going to be a lot of volatility in it, just like we're seeing in our currencies and our bond yields. But right now, particularly in copper, there are major copper shortages around the world, and with all the EVs and everything that we're building, we're just consuming it like crazy. So we're going to have to figure out some country to dig up, I guess, so that we can get enough copper to keep that going. But watch that carefully here in some of these copper plays in the market. If you take a look at GDX had a really good day yesterday. We had broken this trend, but we came back and found this support in the chart and really shot up yesterday. So those miners are coming up, and you can look at like Barrick Gold pushing up. You can look at AY making a move to the that's utilities. AU moving to the upside. So keep an eye on some of these gold stocks. Newmont made a huge move yesterday. Now, part of this was their earnings, but a big push here to the upside, and you can see trying to make a breakout up here. I'd be keeping an eye on some of these miners. And if you take a look at like GDXJ, the junior miners, they also had a very good upside move here, trying to break this little downtrend that they'd started and pushing back up. So I'd keep an eye on this sector. Let's take a look at the oil sector. If we take a look at energy has been holding up really, really well and continuing to show strength, despite the fact that we have seen that little pullback in gasoline and oil prices, with maybe some little bit of fear pullback in the Middle East. But if you look into that conflict, it doesn't look like it's getting any easier over there. It may be potentially expanding, as a matter of fact. So we'll want to watch this carefully, because if we had some kind of a major complication that showed up over there in the Middle East, I would expect to see those oil prices pop pretty hard. Now, the opposite is true. If we get some resolution, if cooler heads prevail over there, perhaps we can finally get some relief in this. But oil prices continue to move up, and remember, it's those oil and gas prices that's a major factor in the costs that are going up in for the consumer, and pushing them to the brink, and really pushing hard on inflation. So we'll want to watch this pretty closely, because as oil goes up, inflation typically goes up. So watch carefully for that. Let's take a look at our financial sector right now. Even with the bonds pushing the way they are, and we know this is hurting the banks because their rates are having to go higher, and they're not loaning as much because of the market conditions in here. But we still have no fear here at all in our financials. We do, however, show a little bit of acknowledgement to that potential downtrend and resistance here in the chart. We tried to move down yesterday with that big push up in those bond yields, but notice we bounced right back. We're just not concerned. at the moment. So we'll want to be watching this carefully. If that pushes on through up here and holds up above this area, then I would suggest we're starting an uptrend in the financials. If we, for some reason, do see the potential dangers here with the rising rates, then that possibility that we could slip right here, and that creates that lower high, and then we'd be looking for a retest of these lows here on XLF. And the same with the regionals. KRE, Regional Bank ETF, rallied right up here into this downtrend and price resistance in the chart. So we'll want to be watching this area pretty closely. Notice yesterday they had a little bit of a pullback. That possibility that we could resume this downtrend, or just, I shouldn't say resume, continue this downtrend here in KRE if we continue to see those pressures building with the higher rates on the banks. And they've got that additional problem of the commercial real estate problem that is really adding to their pressures here. So keep an eye on KRE. First off, let's also take a look at some of these tech. When we look at Microsoft, just this zooming move yesterday, pushing right back up here toward these highs. So it's going to be a little bit difficult in here to place a logical trade if you were to buy it today because your stop loss is so far away. But if Microsoft can follow through here, look for the opportunity that Microsoft could break out up here. If we can break out and hold up here, then I would look for some upside there in Microsoft. And I'm going to say the same thing about Google. Google just ripping to the upside here, just tearing it up, and probably needs, there's no way I'm going to chase this. If you're not already in it, it'd be very, very dangerous for a possible pullback. But look for that resting pullback to occur here, and you might find your way into Google. Now, keeping in mind, we had a lot of upside push here in these charts, even though had nothing to do with Microsoft or Google. AMD had a nice little bounce here right after those companies reported, and notice we're back up here testing this downtrend. Now we've had a pretty significant slide here in AMD. If this can hold in here, break that downtrend and hold maybe a little higher low in here someplace, and just keeping in mind it's going to be reporting next week, keep an eye on AMD. So there are some techs out there that would be worth keeping an eye on. Amazon had a big bounce on the Google and Microsoft earnings reports. So you tell me why on that, but just because it's tech and just because people are so hyper-focused on only a few companies in the market is the only reason I can think. But a big pop. So if they can follow through with that big pop, every reason to believe they reclaim this support area. You reclaim that support area and hold up here, then hey, we've got some upside opportunity there. So watch that carefully in Amazon. Intel did not fare as well yesterday. Pretty hard pullback here in Intel, lowering guidance. And if we take a look at our IBM got a little tiny bit of benefit out of those reports yesterday, but not so much here. IBM still feeling pretty weak. So we have a mix of data here on these, and we're going to have to be pretty picky and choosy about the stocks that we trade here in tech at the moment. So keep an eye on those. Defensive sector stocks, we saw Colgate really making this push this morning on its earnings. But if you take a look at some of those defensive sector stocks like Walmart trying to push its downtrend through, we're seeing things like Mondelez making a nice little rally back. These are defensive sector, they are dividend paying stocks, and there's a little bit of rotation that I think is starting to happen here once again, and we're seeing some of that fear in the market. And folks are looking for a little bit of safety play in these dividend stocks. So I would watch for that. And I would also make note of what's going on here in utilities. Utilities would normally not be the thing that you would be seeing in a super bullish market moving to the upside. What it is suggesting is that folks are running to the safety of the high dividend paying things like utilities. So keep that in mind while we're getting that sense that, oh boy, it's all systems go here. Remember, our economic numbers are not saying that. So be kind of careful here with all the hype in tech. So with that, everyone, hey, I want to wish you all a fantastic day. I want to wish you great results in your trading. Thank you so much for listening, being here this morning. I truly appreciate it. I want to wish you all the best this weekend. Have a great time with your family. Remember, no matter what happens today, the market will be open once again Monday morning, and we'll be right back here trying to read through the tea leaves, I guess, and figure out how we were going to approach the day. Everyone, take care. Wish you all the best, and I'll see you bright and early Monday morning.